That is exactly what people need to hear. And Pompliano said something this week, which I'll repeat on this show, and I did his analysis. Since 2000 January, the U.S. dollar has lost 22% of its purchasing power. That's been the impact of inflation. So again, just for viewers and listeners, if I have a dollar in 2020, it's worth 78 cents today. Now, however, if I own assets, maybe they went up with inflation. So the irony is I feel richer on a nominal basis. This is the sinister plot that's pursued by the politicians, because if I had $100,000 in 1989, that's like having $670,000 today, Raoul. Okay,
Yeah.
in terms of its purchasing power. But if I have $670,000, it sounds like it's more money and I'm richer, right?
Yeah, but you're not. No.
Well, I'm not. So $6.7 million, I'm rich, but it's the same amount of money as being a millionaire 34, 35
But that
years.
inflation is not the only, that only captures a small part. It's the actual debasement of currency that makes assets look like they're going up. So the Venezuelan stock market, if you ever see a chart, looks like it goes vertical. It looks like the best performing stock market in the world.
Right, of course.
When you put it in Venezuelan bolivars, it's down 90%.
Right.
It's because they've been devaluing the bolivar.
So let's put the U.S. stock market. You don't have to give me the exact number, but I know you're a macro guy. So the U.S. stock market in Bitcoin has done what?
Down 99.97% since 2012. The
Since
NASDAQ,
Bitcoin started.
99 point, yeah, since 2012, not even since Bitcoin started.
Right, so since 2000.
Every single asset on Earth versus Bitcoin since 2012 is down 99.9%.
Okay. So when someone says it's an inflation hedge, just for viewers and listeners, more context, your dollar is worth 22% less.
Enjoy this clip? Well, come and join me on The Journeyman, my YouTube channel. Subscribe there for more of this as soon as it comes out. I'll see you there.
Bitcoin has gone up 800. It's gone up 8x since January of 2020. And so this is the reason why people like Raoul and myself are ringing the bell on Bitcoin. Let's switch to the ETF for a second. When the ETF came out, there were pundits saying, oh, the ETF is priced in. Remember that? Someone said, oh, it's priced in. Was it priced in?
None of us expected $10 billion of demand in 6 weeks or whatever stupid number it was, right?
Okay.
It was,
all right, but
we kind of thought it might do it in a year because that's what gold did, GLD in its first year. But it did it in a record short amount of time, and it doesn't seem to be slowing down. So, no, it wasn't priced in. We didn't realize how many ordinary people, RAAs and investors, are starting to realize this issue that you're talking about is I need something to protect my wealth into the future and maybe make me money, not just protect my savings, but I want to make some money too. And this does that. As it says, you know, if you hold Bitcoin over a few years, you can buy something like 5 times as much S&P 500 just in a few years. So your purchasing power is going up dramatically every year you own it. And that even takes into account the fact that it goes down every 4 years, a significant amount. Over the long run, it doesn't really matter.
Let me ask you this, because this is something that I was dying to ask you last time. The halving. Is that priced in? Because you're right. We didn't have $10 billion. You had asked me on February 9th when you joined me on this show, were we going to see $10 billion in the first quarter of the inception of Bitcoin? I would have said absolutely not. But the halving, we know. The halving is going from 900 coins a day that the network is producing down to 450. So is the halving, which is going to come up 17 days from now, 15 to 20 days from now, is that priced in?
It's so known, but what is not priced in is the liquidity cycle that comes around the same time. around election years, as I mentioned before, we get a lot of liquidity coming in. And people aren't very good at forecasting now. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races. And then there's more demand comes in. Because remember, we talked before that as price goes up, as number go up, more people get involved.
Right.
And there's less supply. So it
Right.
starts to get really reflexive. So it kind of gets really squeezy. And that goes on for a period of time, usually about a year and a half after the halving.
Did we just experience our last bear market in crypto or Bitcoin specifically, or are there future bear markets coming?
There's bear markets in all assets, and this is just an asset. And it's a very reflexive asset, so it tends to over-exaggerate